Alright, hey folks, what's going on? It's Mike. I wanted to go over Shopify because we put out the signal without explaining it first, just because I wanted to get it out there. Okay, so Shopify is another technical setup, different from eBay. eBay was an inside bar. This is a swing breakout. So what we have here in the swing breakout, we're using an hourly chart. Let me make this a little bit bigger for us. Okay, so what we have here is we have the close outside of the hourly bar. An hourly bar outside of the Donchian channel. That's what here was. What you're looking for is a retracement. Ideally, you'd like that retracement to bounce off of the top here. Here it pulled back a little bit more, about another dollar, but this is a $202, $203 stock. And then you're looking for that rejection, which is what we got. And this is where we got in. And now it just took off. It's trading 203.68. And we got in probably around 202.60 or something like that. I'll have to go back and look exactly where things were. But this is what we're looking for. Now, it gets through this 100-day. That would be the 100-hour. We are good to go. But looking at it on the daily chart as well, you have an obvious uptrend. It got a little bit in here because there was some Instagram news that kind of messed with Shopify, but definitely still showing all that strength in an ever increasing market. So I like the opportunity. So then we go back down here and we figure out, okay, we figured out that we want to get long this thing. Let's say that we were trading 203 at the time. Going out to April, regular April vol was 37.7. And so we are targeting anywhere from the high 221s to the low 224s. So with something this expensive, I'm thinking broken wing butterfly to try and lower our cost basis. And so I'm going to target that 222 half area. So that 222 half area, go out to regular April here. So doing the 217, 222 half, 225, that was trading, it's a wider market because it's a four-legged spread, but to get into this thing for 70 cents seemed like a great reward to risk for us, especially given the technical picture that we've painted. So we're looking at the 217 half, 222 half, 225. Buy one, sell two, buy one. Okay, anywhere from 217 half and lower, we're going to give away our debit, which in this case was 70 cents. We're just going to give away your entire premium. Break even is going to be the 217 plus the 70, which is 218.20. Because then you have a call that's 70 cents in the money. We paid 70 cents to get in, so that's break even. Ideally, in any of these vertical spreads that we do, because all broken wing butterfly is a combination of two verticals, right? We bought the 217 half, 225 half, and we sold the 225 half, 225. Bought a $5 one, sold a $250 one. So the best place to go is right to our short strike, because then we're maximizing everything about the thing that we're long, minimizing about the things we are short, and we really don't care about the 225s at this point. So then we have a $5 net of the spread. We still pay the same 70 cents. We make $4.30, $5 minus 70, $4.30. We're getting over 6 to 1 if this thing goes and pins at the 222 half. Worst case scenario to the upside is if we go to 225 or higher, because then we've blown through all of our strikes, but the front end of our spread is wider than the back end of our spread, $5 versus 250. So we make 250, we still have to pay that 70, we net $1.80. That's still over 2.5 to 1. It just seemed like, if this technical picture is going to play out, this seems like a fantastic reward to risk. And just hope that it just takes off and goes. Okay, any questions on that? I did record this. It's a relatively short video, about 5 minutes. But if there's no questions on that, I will render this video and get that out to you as soon as I can. And right now we should be out of all of our positions except for VIX. And then we got into Shopify and eBay today too, after selling out of EA and Roku. Just keep on churning, manage the risk, take profits when we have it. Okay, good job everybody. I'll talk to you later.